So A is A, pay your taxes. What do you remember by that? You remember that any taxes that are paid other than GST and TCS is to be added to the value of supply. Next, B. In clause B, you're paying on behalf. Okay, B from B, behalf. If any amount that is paid or payable by the recipient to a third party to whom the supplier was liable, then such amount is to be added to the value of supply. Right? Clause C. What do you see? I see an incident. Okay, from that incident, you're seeing an incidental expense or you're seeing commission and any packing expenses that are taking place. Okay, next, from clause D, you see a delay. Clause D, delay. Okay, because of the delay, what are you doing? You're paying interest payment and late fees, or you're paying IPL. Okay, IPL. Okay, you're paying interest, penalty and late fees. Now what do you do with clause E? Clause E, subsidy. Clause E, subsidy. Okay. Hello guys, today we'll be starting with value of supply. Okay, in GST. I think this is chapter number 5. I'm not really sure, but like we're going to start with value of supply today. Okay, so obviously first I will explain what each and every subsection means, and then we'll dive into the sub clauses in that. Okay, or we'll dive into the clauses in that. Okay, I'll explain each and every one of them, and by the end of the video I will guarantee that you will be able to tell what each clause is for. Okay, what each clause means. Okay, or rather the title and the content of each clause. Okay, so that is a guarantee. Okay, because this chapter is quite small. Okay, this chapter is quite small, but it will end up giving you almost 4 to 6 marks. Okay, 4 to 6 marks worth of questions will come in the ICI paper as per the past papers and analysis of the past papers. Usually it comes to around 4 to 6 marks. Okay, so in this video we'll be covering only the concepts. Okay, only the concepts. In the next video, I think this will be the first one. In the next video I'll be covering the ICI study mat questions, right? ICI study mat questions plus the Edu91 GST question bank. Okay, GST question bank. Okay, so this is what I'll be covering in the next video. Okay, let's just start without any further delay. Okay, so firstly, why is valuation of supply important? Okay, why is valuation of supply important? So in GST, value of supply is very important because it helps us calculate the GST. Okay, so here we know the rates. Okay, suppose the rate of some particular item. Okay, so if this is item A, right? If this is item A, we know that there is 18%, right? 18% GST. Okay, so on what amount do we charge this 18%? This 18% will be charged on the value, right? Value as per section 15. Okay, so this is a value of supply is important because it is the value on which the percentage of GST is charged, or on which the GST is charged, right? Very simple, right? We'll just move on. Okay, so here section 15 talks about valuation. Okay, section 15 valuation, section 15 value of supply, section 15 value of supply. Okay, so by the end of this video you will 100% know that section 15 means value of supply. Okay, now coming to section 15 subsection 1. Okay, so section 15 subsection 1. Okay, this talks about what the original value of will be. Okay, meaning the taxable value without any other inclusions or exclusions. Okay, basically the value of the particular item that is paid or payable. Okay, so this is the value paid or payable. Okay, next, section 15 subsection 2 talks about what are the things that you are supposed to include in that value, or what are the things that you are supposed to add. Okay, and the things that you are supposed to add to the value. Okay, next, section 15(3) talks about what you are supposed to exclude, or what you are supposed to remove, or what should not form. Okay, here basically it should not form part of value. Okay, very simple, right? So first this 15 will tell what is the value of that particular good or service. Okay, right? And section 15 subsection 2 talks about what are the items that we are supposed to add into the value. Section 15 subsection 3 talks about what are the things that should not form part of the value, meaning what are to be excluded from value. Okay, so section 15 talks about the value, right? This talks about the value. Section 15.2 talks about what is supposed to be included. Section 15 subsection 3 talks about what are the amounts that are to be excluded. Okay, now section 15.4, or rather section 15 subsection 4 is not in our ICI or ICI syllabus for CA Inter. Okay, so I'll just give you an overview of what this section 15 subsection 4 contains. Okay, so in cases where either consideration paid is not consideration is not paid through money, okay, or non-monetary consideration is there, meaning either payment is made in kind, right, non-monetary consideration, or if what do you say, if there is any non-monetary consideration, and second it is between related party. Okay, so if it is a non-monetary consideration, or if there is a transaction between related party, section 15.4, or any other residual case, right, any other residual case, right, that will go to section 15 subsection 4, where there are different rules. Okay, 29, 30, 31, right, where basically it gives guidelines as to how you're supposed to value these transactions. Okay, how to value these transactions, right? Okay, so basically we are concerned only with section 15 subsection 1, subsection 2 and subsection 3. Okay, fine, we'll move on. Firstly, section 15 subsection 1. Okay, so section 15 talks about valuation. Subsection 1 of section 15 talks about what is the transaction value. Okay, what is the base value. Okay, meaning before anything is added or anything is included or anything is excluded. Okay, so here the value as per section 15.1, section 15 subsection 1 is the price paid or payable for the good or service. Okay, so basically the basic price that is payable for that particular good or service. Okay, basically there is nothing included, there is nothing excluded. Okay, so this is the basic price that is paid or payable. Okay, this is as per section 15.1. Okay, here we have to keep certain things in mind while checking whether it falls under 15.1 or not. Okay, so to fall under 15.1 or 15 subsection 1, the price should be the sole consideration. Okay, so the price that is charged should be the sole consideration, meaning that there should not be any payment in kind, or there should not be any barter or exchange. Okay, so price is the only consideration. Okay, meaning only amount, only money, or only monetary consideration. Okay, to remember it easily, it should be only monetary consideration. Okay, it should not be a barter, it should not be exchange, right, it should not be any payment in kind, right, only monetary consideration. Okay, now, and the second condition is transaction should be between unrelated persons. Okay, it should not be between related person. So what are the two conditions again? We'll just go off the screen right here. What first condition was that price should be the only consideration. Price is the only consideration, right? And second, what was the second condition? What was the second condition? The second condition was that transaction must be between unrelated persons only. Okay, unrelated persons. Okay, so here section 15.1 does not deal with this. In other words, to say that section 15.1 does not deal with, or deals only with, basically actually it deals only with, okay, section 51 deals only with these. Okay, so is there and, or is there an or? What is there in here? Obviously there is and. Okay, so should remember this. Okay, it could be like you might lose 1 or 2 marks over here when it comes in the MCQ, right? Because we know that ICAI will ask questions like this. They'll just ask whether this is an and or an or, meaning both these conditions should be satisfied. Okay, so here price is the only consideration and transaction is between unrelated person. Even if one condition is broken, then 15.1 it won't come under 15 subsection 1, it will go to 15 subsection 4. I'll just discuss that right now. Okay, or here. Okay, so basically, even if one of the conditions fail, meaning even if one of the conditions is not satisfied, then go to section 15 subsection 4. Okay, where it talks about where the valuation will be done as per prescribed rules. Okay, basically 15.4 just says that valuation will be done as per prescribed rule, right? Prescribed rules. This is what section 15.4 says. Okay, what are those CGST rules that is outside our syllabus? Okay, that is out of the CA inter syllabus. Okay, but anyway, I'll just give an overview. Okay, so section 2, there are rules. It starts with, I think, rule 29 and goes all the way up to, depending on what kind of service or what kind of transaction it is. Okay, next here in the IGST Act, for valuation, it refers back to section 15. Okay, section 15. Okay, so what refers, so IGST, section 20 of the IGST Act. So section 20 of the IGST Act with regard to valuation refers to check section 15 of CGST Act. Okay, basically in IGST Act it says for valuation of interstate supplies, check section 15 of CGST Act. Okay, so here section 15 of CGST Act is made applicable in the IGST Act through section 20. Okay, next. So that's how section 15 applies both to interstate also, intrastate also. I'm assuming that you guys know what interstate and intrastate is, right? Interstate is between two different states, or between one state and one union territory, or between one union territory and another union territory. Okay, but if it is within the same state, if it is within the same union territory, that time it will be intrastate. Okay, otherwise it is an interstate supply. Okay, next, section 15 applies to import of services only. Okay, it applies only to import of services. It does not apply to import of goods. Okay, you have to remember this when it comes to valuation. Section 15 talks only about importation of services and not importation of goods. Okay, when it comes to the interstate supplies that are there, no, it is only import of services. Okay, does not talk about import of goods, right? So import of goods, where is import of goods covered? It is covered under the Customs Act. Okay, which is again not there in our syllabus, right? So here we are going to talk only about import of services when it comes to section 15. Okay, next. Okay, next, what is not covered under section 15.1? Okay, related party transactions are not covered. Any amount that is free of charge, any transaction that is free of charge, right? Any non-monetary consideration, if there is any non-monetary consideration that is paid in respect of goods or services, that time section 15.1 is not applicable. What will be applicable? Section 15 subsection 4 will become applicable. Okay, that is the CGST rules for valuation. Okay, we'll move on. Okay, this is very clear, right? I'm assuming that this is clear, right? How about we just go off the screen, right? We just go off the screen and try to recap everything that we just discussed right now. Okay, so what did we discuss? We discussed first that section 15 talks about valuation. Okay, it talks about value of supply, right? Next, what did we see? Next, first we saw there are 4 subsections, right? So 15.1, 15.2, 15.3 and then 15.4, right? 15.1 talks about what taxable value is, right? What is the taxable value? I'll just come into that. Okay, next section 2 talks about, subsection 2 talks about what are to be included, right? What is to be included. Section 15 subsection 3 talks about what is to be excluded, right? And section 15.4 talks about, or 15 subsection 4 talks about related party transactions, or where non-monetary consideration is paid, right? So this is basically an overview of the sections. Okay, next, what did we talk about? We dove more into what 15.1 talks about, right? So 51 tells that the taxable value is the price paid or payable, right, for that particular supply. Okay, so next I'll just ask questions, you just have to answer in yes or no, okay, in the background itself. Right, next, so what are the conditions? Okay, I'll just cover the conditions first, okay, because we discussed that also. So conditions are, there are 2 conditions. First condition is the price should be the only consideration. Price is the only consideration, right? Next condition was that supply should be between unrelated person only, okay, unrelated persons, okay. So these are the 2 conditions. Okay, now I'll just keep asking questions, you just have to answer in yes or no. Okay, firstly, does section 15 apply only to interstate supplies? Does section 15, or rather does section 15 of CGST Act, the section 15 of the CGST Act apply only to intrastate? Answer is no. Okay, section 15 applies to both interstate as well as intrastate. Okay, so it applies both to interstate and intrastate. Okay, next, which section, this question can't be yes or no. Okay, so which section of the IGST Act allows or provides a provision referring it to the section 15 of CGST for valuation of interstate supplies? So section 20 of IGST Act. Section 20 of IGST Act refers to section 15. Okay, so section 20 of IGST Act refers to section 15 of the CGST Act for valuation of interstate supplies. Okay, next question, does section 15 apply to import of goods? Does it apply to import of goods? The answer is no, it does not apply to import of goods. Okay, import of goods is covered only from Customs Act. Okay, only Customs Act, or rather import of goods, or rather section 15 covers only import of services. Okay, it does not cover import of goods, it applies only to import of services. Okay, next I'll just erase this. Okay, oops, just erase only this part. Okay, next, does section 15.1 does it apply to related party transactions? No. Okay, does it apply to non-monetary consideration or transactions where non-monetary consideration is paid? No, it doesn't apply there also. Okay, does it apply to transaction where it is where it is transacted free of charge? Okay, where there is no consideration. Section 51, does it apply to free of charge transactions? No. Okay, basically this is the recap of section 15.1. Okay, let's move on. Okay, Okay, this was done, right? Next, now moving on to section 15.2. What is section 15.2? It talks about what is to be included. What is to be included in value of supply. Okay, what is supposed to be included in the value of supply. Okay, now first I will just dive into what each and every clause means. Okay, so 15.2a, 15.2b, right? And then I'll help you memorize how to remember the clauses as well. Okay, so here starting with section 15.2a. Okay, so taxes other than GST. Okay, any tax that is paid other than GST, any tax other than GST should be added to the value. Okay, any tax, basically any tax other than GST, right? It should be added to value of supply, added to value of supply. Okay, next, right? Now there is an so any tax charge should be included in the value. Okay, so we'll just read through this part. Okay, I'm reading over here. Okay, any tax charge should be included in the value. Okay, except for GST and TCS as per income tax. Okay, so why TCS is excluded is because if you consider TCS also as value of supply, it will be like a tax on tax. Okay, so basically if you're charging 200 plus 10% of TCS, 10% of TCS, so you'll be charging 20, right? So the total will become 220, right? On this again you're charging GST, right? So on this you're charging, let's for the sake of like easy calculation, we'll just take another 10% of GST, so that will become plus 22, right? So 220 plus 22 will become 242, right? There's a, here also you have put tax, again this tax is on the amount that is already taxed, so it will become a tax on tax, right? So that's why TCS has been excluded, meaning you don't have to add TCS into the value of supply. Okay, very simple, right? So we'll just go through it again, right? Any tax charge should be included in the value of supply except for GST and TCS as per income tax. Okay, so here TCS, there's TCS as per GST also, and for that also the same section 15 is applicable. Okay, for valuation. Okay, now I'll just cover it one more time, right? Any tax that is charged should be included in the value except for GST and except for TCS as per income tax, meaning these two won't be added to the value of supply. Okay, and every other tax will be added. Okay, next we'll just solve one case. Okay, like one example I've given here. Okay, so here so the price of the good is 1 lakh. Okay, so the price of the price of one particular either good or service, right? Any particular good or service, we'll just call it item A. Okay, so the price of item A is 1 lakh rupees. Okay, the basic cost, meaning the base price is 1 lakh rupees. Okay, so GST has not been added into this 1 lakh. Okay, there's no GST that is included in that. Okay, next, excise and duty. Excise duty is of 18,000 rupees. Okay, now this we'll have to add as per section 15.1, right? And this we'll have to add as per section 15 subsection 2 subclause A. Okay, because of section 15.2 subclause A, we'll have to add excise duty also into the value of supply. And GST, let's assume 18% GST. Okay, let's assume this item A has 18% GST. So GST will be charged on this basic plus excise and duty. Okay, so it will be 1 lakh into, rather I'll just close this, right? Yeah, 1 lakh 18,000 into 18%. How much is 1 lakh 18 into 18%? 1 lakh 18,000 into 18%. That will come up to 21,000. I'll just add it. Okay, so the price that is payable, I'll just scroll down, price payable will become 1,39,240. Okay, so this is how you are supposed to calculate when it comes to section 15.2a. This is basically from section 15.1 or section 15 subsection 1, and this excise duty is added due to section 15 subsection 2 clause A. Okay, next over here in case 2, right? So here there is a car that is being purchased. Okay, so let's just assume that there is a car that is being purchased. Okay, so here car, right? Now that the cost of the car is 12 lakhs. Okay, so the basic is only 12 lakh. Okay, so the basic is only 12 lakhs. Okay, so the basic is 12 lakhs and GST is not included in this price. Okay, GST is not yet included in this price, which is okay. We are just going to ignore it. Okay, right? Now, and then this TCS is also not included in the price. Okay, because the basic is only 12 lakh and there's already 12 lakh over here. So now are we supposed to take TCS into the value of supply as per section 15 subsection 2 subclause A or clause A? Right? No, we're not supposed to take TCS. Okay, not to be included. Right, we're not supposed to include this. Okay, but RTO tax, did it fall under the exception? The only two things that are excluded from section 15(2) is GST and TCS. So any other tax that is being charged should be added to the value of supply. So in this case here, this basic price comes thanks to section 15 subsection 1. Okay, this is to be added because of section 15 subsection 1. GST is not to be added. Okay, this we won't be adding this amount. We won't be adding this amount because it is exempted as per section 15(2) clause A. Okay, and TCS also is not to be added because it is excluded by section 15 subsection 2 clause A. Okay, now RTO tax should be added. Okay, RTO tax should be added. Okay, should be added because of section 15 subsection 2 clause A. Okay, so here that's what we'll see, right? Here basic of 12 lakhs, RTO of 30,000, total of 12 lakh 13,000. And suppose the car has, let's just for example purposes, we'll just assume that 18% is only, or rather we'll just put 28% itself. Okay, so we'll just assume that there is 28% tax. So it will be 12 lakh 30,000 plus GST of 28%. Okay, so it will be 12 lakh 30,000 plus 28%, which is 15 lakh 74,400 rupees. Okay, right? So this is the final price, meaning including GST. Okay, next, I think this is sufficiently clear, right? I'll just cover it one more time, right? So here section 15(2) subclause A talks about taxes other than GST. Okay, any tax that is charged should be included in the value of supply. Okay, except for two things, except for GST and except for TCS collected as per Income Tax Act. Okay, next. Next, moving on to section 15(2), again 60. Now here section 15 subsection 2 talks about what is to be included. Okay, included. Okay, and then the first one, A talked about income tax, or rather talked about taxes other than GST and TCS. Taxes other than GST and TCS. Now section 15 subsection 2 clause B, I'll just tell it again, section 15 subsection 2 clause B. So here any amount paid or payable by the recipient of the supply, any amount paid or payable by the recipient of supply to a third party. So here the recipient, okay, the person who is receiving the goods or services is making payment to a third party, or there is an amount that is payable to a third party. By whom? By the recipient of service. Okay, by the recipient. Okay, now a recipient of service or good. Okay, it is not only good or not only service, it is both. Okay, any supply. Okay, any amount that is paid or payable by whom? By the recipient, right? By the recipient of supply to whom? To a third party. Okay, any amount paid or payable by whom? By the recipient of supply to whom? To a third party. Okay, and that that third party should be a person to whom the supplier should have paid, okay, or to whom the supplier was liable to pay. Okay, we'll just see an example here, okay, so that we can understand more. Okay, now here A is the recipient. Okay, in this case A is the recipient, right? Meaning he is receiving the service or he is receiving the goods. Okay, in this example he is receiving the goods. From whom is he receiving? He is receiving it from B. So B is the supplier. Okay, so let's say there is a contract between B and C that B will only pay at the amount of the goods. Okay, let's just say B should have paid C 1000 rupees for transportation. Okay, for transportation B should have paid C. Okay, so what B did, B asked A to pay for the transportation. Okay, so B asked A to pay for the transportation and B asked him to pay directly to C. Okay, so here what is happening, A wanted goods from B. Okay, so B ordered the goods from C, so C sent it to B. Okay, so firstly C sent the goods to B and B sent the goods to A and told A to make payment to C for the transportation charges. Okay, is this clear here? So this 1000 rupees, right, this 1000 rupees, it should have been paid by B to C, right? It should have been paid by B, the supplier. It should have been paid by the supplier to this third party. This C is the third party here. Okay, so when the recipient or any amount that is paid or payable by the recipient, so here by the recipient to whom? To a third party, right? Recipient to a third party. Okay, right? So when any amount payable or paid by the recipient of supply to a third party and to whom and where such or that third party or the payment to the third party the supplier was liable to pay. Okay, so basically any payment, any amount that is paid or payable, any amount that is paid or payable by whom? By the recipient of supply. To whom? To a third party, and to that third party the supplier was liable. Okay, so any amount paid or payable by the recipient of supply, right, by the recipient of supply to a third party to whom the supplier was liable. Okay, so here in this case I'll just explain it one more time. Okay, if you just listen. Okay, if there's any confusion, it will get cleared. Okay, so here B is the supplier, right? B is the supplier and C is the third party. So here C is the third party. Okay, and A is the recipient of supply. Okay, so A is receiving goods from B. A is receiving goods from B. Correct? Okay, now B tells A to make a payment of transportation charges to C. Okay, so here A makes payment to B of 4000 rupees for these goods, and for its transportation A will pay C amount of rupees 1000 rupees. Okay, so this payment to C should have been made by B, but he is asking us only to pay. Okay, so he is asking us only to pay. That's why we are paying C. Okay, we as in A. That's why A is paying directly to C. Is that clear? Right. So now any amount that is paid, any amount paid or payable, any amount that is paid or payable by the recipient of supply to a third party to whom the supplier was liable. The supplier was initially liable to the third party, correct, for the transportation, but that payment was made by the recipient, right? So now what is the logic behind this section 15 to subclause B or clause B? Now what is the logic behind this? Here the logic is that if the supplier himself had paid to the transportation guy, he would have added it to your bill only. Okay, so if supplier had, let's say he supplied you goods of 15,000 rupees, and then to the transport agency he have to pay 1000 rupees, right? So he will make you a bill for 16,000 rupees. So either unless there's some offer going on, or if that supplier is, like filthy rich, he will obviously not cover this expense, right? He will obviously add it to the cost of the recipient, right? So that's why 15,000 he will charge it to the customer, which is the value of the goods, and this 10,000 rupees worth of transportation charges also he will add to the cost of the recipient. Okay, so now since this 1000 rupees is borne by the recipient, it will get added to the supply. Okay, so since the recipient is making this 1000 rupees on behalf of the supplier, okay, so if the recipient himself had gone to some transport agency, if the recipient himself had the liability to pay that 1000 rupees, then we won't consider it a part of this supply. Okay, here if this to the third party, if there is a third party and the recipient is only liable, if the recipient is only liable to this third party, then we won't add it to the supply. But we will add it to the supply only if the supplier was liable. Okay, if it was the supplier's liability to pay the third party and the recipient is paying, only that time it will get covered. But if it is the recipient's liability to pay the third party only, we will not consider it into the value of supply. Okay, because this is separate transaction, and what is happening between these two are separate transaction. Okay, so here it is separate and this is separate. Okay, but if the supplier only had to pay the third party and recipient is making payment to the third party, right, in this case it will form part of same supply. Okay, did you understand? That is why we are adding the any amount that is paid or payable by the recipient of supply to a third party to whom the supplier was only liable. Okay, that's why we are adding that amount. Okay, clear? Next, we just so here in this case I'll just explain again. Okay, so in this case where A paid only 4,000 rupees to B and paid 1,000 rupees to C on behalf of B. So on behalf of B, he paid 1,000 rupees. So the value of supply in this scenario will become 4,000 plus 1,000, which is 5,000 rupees. Okay, is that clear? Okay, so the value of supply only between A and B. Okay, between B and C there is a separate transaction that we are not talking about here. We are talking only about the transaction that is happening between A and B. Okay, clear? Nice. Next, this is clear. Okay, next we will move on to 15.2 or section 15 subsection 2 clause C. Okay, so here again I'll just explain. Section 15 talks about valuation. 15 subsection 2 talks about what is to be included. And now we are talking about clause C. Okay, we had covered clause A, which was taxes other than GST, right? Other than GST and TCS, right? Now, and clause B was about payment to third party, right? By whom is this third party payment being done? This payment is done by recipient on behalf of supplier. Okay, now coming to clause C, we are going to discuss about clause C. Okay, clause C talks about incidental expenses, commission and packing or packaging, okay, charged by the supplier. Okay, this should be only before or at the time of supply. Okay, only before or at the time of supply. Okay, now when any of these incidental expenses are have been occurred, or if there's any commission that is charged, if there's any packaging cost that is charged, right, it will be treated like a composite supply. Okay, what is a composite supply? Composite supply is a supply that talks about or rather where if more than one, okay, or two or more items are being bundled together, okay, are naturally bundled together, that time what will we do? We will charge the GST rate of the principal supply. Okay, basically for this example it's right, if there's a shirt, okay, there's a shirt that costs, let's say, 5,000 rupees, okay, and the GST for this shirt, let's just assume 18%, okay, and then there is packing expenses, okay. This shirt will come inside a box, okay. So for composite supply, if it is a composite supply, what will happen? This box, let's just say it is 500 rupees. This 500 rupees will be clubbed together, okay. If they're naturally bundled, they will you have to add the cost of the ancillary product also, which is the packing charges or the packing box, right? And then you will have to charge the rate of the principal supply. Here the principal supply is the shirt, or this shirt is the dominant one, right? Packing is not the dominant supply. Dominant supply is the shirt, right? So we will take the GST charged by the principal or the dominant supply. Okay, next. So if there is any incidental expenses, if there is any commission that is charged, or if there is any packing expenses that is charged by the supplier before or at the time of supply, only then it will be treated as a composite supply. Okay, and it should be billed to the customer, right? So that was section 15 subsection 2 clause C. Okay, very simple, right? Now next, moving on to section 15. Again, what does section 15 talk about? Section 15 talks about value, right? And section 15 subsection 2 talks about what is to be included in that value, right? What is to be included in that value. Now section clause D talks about interest, penalty and late fees. Okay, so clause D talks about interest, penalty and late fees. Okay, next. So any interest, penalty or late fees that is charged, is to be added to the value of supply. Okay, any interest, penalty or late fees that is charged is to be added to the value of supply. Okay, now, and it is always, there's a fixed charge. Okay, there's a fixed GST amount that is 18%. Okay, you will charge 18%. And now in case that interest, penalty and late fees is waived off, where the supplier tells no need to pay this interest, penalty, late fees, then no need to charge GST. But if that supplier is charging interest, late fee or penalty, then you will have to add it to the value of supply. Okay, if it is waived off, no need to add. Okay, if the supplier is charging, then only it will form part of value. If the supplier is waiving it off, then no need to add it to the value. Okay, next we'll just see the example. Okay, so because this interest, right, when they have given the interest amount that is charged, should we assume it as inclusive of GST or exclusive of GST? I mean, if the question has given inclusive or exclusive, then we will treat it as such. Okay, as per whatever is required by the question, we will do. Suppose no information is given with regard to inclusive of GST or exclusive of GST, then what do? We will assume that it is inclusive of GST. Suppose they have given only 500 rupees as interest without giving any other information. They have just told that it is 500 rupees. Then what do? We will assume that it is inclusive of GST, meaning that 500 includes GST amount also. Then we will find out what the GST amount is and what only the interest amount is, right? Next, we'll just see a case over here. Okay, this example. Okay, what is this example over here? Okay, so here there are goods worth 15,000. Okay, this goods worth 15,000 is, we have to add it because of section 15 subsection 1. Okay, and this interest, there are two cases. Okay, firstly we'll talk about exclusive of GST, because that's very simple, right? We can just clear it off and move ahead. Okay, so this interest in case 1, in the first case we'll assume that it is exclusive of GST, meaning this 300 rupees does not include any GST amount. Okay, this 300 rupees does not include any GST amount. Okay, clear? In that case we just have to add that to the value, that's all. Just take 15,000 and add 300 rupees to that. So in the end, your value of supply will be 15,300. So this will be your value of supply. Okay, when it is exclusive of GST, it is very simple. Okay, right? So in case 1, it is very simple. Just add the value of goods and add the interest, and then on this 15,300, charge your GST. Okay, fairly simple, right? I don't think there should be any doubt in this, because it's like exclusive of GST is very simple, right? If you're assuming it as exclusive of GST, just take the value of goods, take the value of interest, add it together, and on the sum that you have added, calculate the GST. Simple, right? Next, when you're in case 2, where you're treating it as inclusive of GST, meaning this 300 contains X portion of interest plus GST of 18%, right? So we know GST is of 18% because we just read it, right? So there's only 18% that you have to charge on interest, 18% of GST that is to be charged on interest, penalty and late fees. Okay, so now we are coming to case 2. Case 2 talks about the amount of interest inclusive of GST. Okay, so here we'll have to apply this particular formula. Okay, right? So this is the interest amount, divided by 118 multiplied by 100. So how did this mathematical magic come from? So it is basically, it has a simple explanation. Okay, so 300 rupees is already inclusive of that 100% plus that 18%. Okay, so total 118%. For how much is 100%? Okay, if 300 rupees, or basically if 300 rupees is 118%, how much is, or rather X is 100%. Now just solve for X, just cross multiply and solve for X. That time will become 300, this 118 will go down here, right? 300 divided by 180 into, and this 100 will get multiplied with 300. Okay, so this is how you calculate when they have given any amount that is inclusive of GST. Okay, so after solving this, you will get 254. Basically this is the amount that is exclusive. This is exclusive of GST. Okay, this 254 is exclusive of GST. Okay, now to check whether you have calculated properly or not, just take this 254 plus 18%. If you do 254 plus 18%, you should get somewhere around 300, or like very few decimal points can be plus or minus, but you should get 300. If you are not getting the 300 back, it means you've gone wrong somewhere. Okay, basically you've gone wrong in this basic calculation. Okay, so you are supposed, if you add 18%, if you take 254, whatever answer you get, and add 18% to that, you're supposed to get back the original amount. Okay, next, now how do you find the value of supply? The value of supply will be original 15,000. This is the value of goods, this is for the goods, right? And this 254 which we found out through here. Okay, and the end of the day your value of supply will be 15,254. On this amount you will calculate GST. Okay, on this 15,254 you will calculate your GST. Okay, okay, clear? Is that clear? I think it should be fairly simple, right? I don't think there's any problem. Okay, I mean, anyway, I'll just go through it one more time. Okay, if you're not paying attention, kindly pay attention now. Okay, so here section 15 talks about value, right? Section 15 rather value of supply. Subsection 2 talks about what is to be added or what is to be included, added or included in the value, right? Next, this clause D talks about interest, penalty and late fees. Okay, so any interest, penalty and late fees that is charged by the supplier to the recipient, which is charged by the supplier to the recipient, okay, any interest, penalty, late fees that is charged by the supplier to the recipient should be included in the value of supply, or should be added to the value of supply, and GST of 18% is to be charged on that value. Okay, GST of 18% is to be charged on the value. Okay, now if that interest, penalty and late fees is waived off, let us assume in the question that is given that 500 rupees worth of interest, late fee, penalty is to be paid, but the supplier has waived off. Okay, if that supplier has waived off that interest, penalty and late fees, then we will not add it to the value. But if it is included, if that supplier has charged, only then we will include. Okay, so answer one last time in yes or no. Okay, whether any amount of interest, penalty, late fees that is waived off by the supplier is to be added to the value of supply. The answer is no, it should not be added. Okay, but if any amount is charged but it is not yet waived off, but it can be waived off, right? It is not yet waived off but it can be waived off, will you add it to the value of supply? That time you will add it, because it is not yet waived off, it can be waived off. Okay, so it can be waived off but it has not been waived off, so you will add it to the value of supply. Okay, next we'll move on to that example that we were talking about. Okay, so in the first case, we'll just talk about the question, right? There's goods worth of 15,000 that is being transacted in this, or there is a supply of goods worth 15,000 and on that interest of 300 rupees is being charged by the supplier. Okay, so in the first case we can assume that this interest is exclusive of GST, and we can just add these two together. Just take 15,000 and take 300 and just add it. Okay, so it will become 15,300 rupees. Okay, but in case 2, if we are assuming that it is inclusive of GST, then we will have to calculate how much the interest is exclusive of GST. Okay, so how much is the interest exclusive of GST, meaning we will have to find out, suppose this 300 rupees is 118%, how much is 100%, meaning how much is the 100% value. Okay, so just cross multiply these two and you will get your answer. Okay, so in this case we got the answer of 254. So we took the original, this is the value of goods, right? This 15,000 is the value of goods, and then we added the interest exclusive of GST, and then we got the value of supply. Okay, now to this value we have to charge the GST. Is that clear? I hope it should be clear. Okay, because I've explained twice, maybe 3 or 4 times if you include the number of revisions I do within the topic itself. Okay, if you have still not understood, then I suggest you take a break and then come back when you're ready to focus. Okay, next, now moving on to the next clause. Okay, here section 15 talks about again valuation. Section 15 talks about valuation. Subsection 2 talks about what is to be included, in that value, right? Included or added to the value. Now we're coming to clause E, talking about subsidy. Okay, that sounded nice. Okay, clause E talks about subsidy. Okay, clause E talks about subsidy. Okay, now subsidy can be of 2 parts. Okay, either it can be a government subsidy or it is a non-government subsidy. Okay, if it is a government subsidy, GST has no problem. Okay, you can reduce it, no problem whatsoever. Okay, suppose your price is 100 rupees, right? Your price is 100 rupees and government is giving subsidy of 80 rupees, then your value of supply will be considered as 20 rupees itself. Okay, but in case of non-government subsidies cannot be, you cannot use non-government subsidies to reduce the value of supply. Okay, basically this is not allowed. Okay, not allowed. Okay, so non-government subsidies are not allowed, as in you cannot subtract it from the value of supply. Okay, is that clear? I'll just explain with one example. Okay, we'll just take this exact same example. Okay, so here there is a good or service that was 100 rupees and a non-government entity is giving a subsidy of 80 rupees. Okay, what will you consider the value of supply for GST? As per section 15, this is only the value of supply. Okay, and GST will be charged on this. Okay, GST will be charged on this amount itself. Okay, is that clear? So when it comes to government subsidy, you can reduce the amount of subsidy that is received. okay, and the value of supply will reduce accordingly. But in case of non-government subsidy, you cannot reduce that for the value of supply. Okay, see, they're talking about only finding out the value of supply, and that value of supply is used to find out the GST amount. Okay, they're not telling that you cannot sell it at a subsidized amount. You can sell it at a subsidized amount, but the GST here will be charged only on the value of supply as determined by section 15. Okay, now let us look at some example here. Okay, so obviously it is very simple when it comes to government subsidy. Okay, if already subtracted in question, if already subtracted, what do you do in this case? If subsidy is already subtracted, if the government subsidy is already subtracted, right? If the government subsidy is already subtracted, then it is correct only. Yeah? So it should have been subtracted, so we will just ignore. We won't do anything. We will not add also. We will not subtract also. Okay. Suppose if it is not subtracted, what will we do if it is not subtracted? We will subtract. Okay, because it should have been subtracted, we will subtract it. Okay. In the next case, it's already subtracted, it is not subtracted. Yeah, basically these are the only two cases, right? If it is already subtracted, ignore, don't do anything. Okay, and if it is not yet subtracted, subtract now. Okay, but this is only in case of a government subsidy. Okay, government subsidy. Okay, next, here in non-government subsidy, there are price linked subsidies and non-price linked subsidies. Okay, here basically they're not giving any subsidy to the price of the product. Okay, meaning we should not consider it in the value of supply. Don't do any changes. Okay, or it should not be in the calculation of valuation of supply. Okay, next, here in this case 1, right, if it is a non-government entity, if it is a non-government subsidy, then if subsidy is already subtracted, if the subsidy is already subtracted from value, should we subtract it? No, we should not subtract it, so we will add back. Okay, if it is already subtracted, we will add back. Okay, but in the case of government subsidy, what did we do? If it is already subtracted, we ignored, because it is supposed to be subtracted, we let it be subtracted. But in this case, in case of a non-government subsidy, if it is already subtracted, it is wrong, right? So we should add that subsidy amount back. Okay, next, if subsidy is not subtracted, okay, if the subsidy is not subtracted from the value, which is correct on you, it should not have been subtracted. Non-government subsidy should not have been subtracted, and they have also not subtracted, which is correct, so ignore. No need to make any changes. Clear? Okay, you'll just look at I'll just show you this example. Okay, here the price of the supply was 100 rupees. Okay, and the government gave subsidy of 80 rupees. Okay, the government gave a subsidy of 80 rupees. Okay, so here GST, for the purpose of GST, when you take this 18%, right, so you will take 100 rupees, which is the original price, and you will subtract it with the government subsidy, and on that reduced amount you will charge 18% GST. Correct? Very simple, right? Very simple, right? I don't think there's any doubt that should arise, right? So here, since it was a government subsidy and it was not yet subtracted from this price, we are going to subtract it and charge the GST, and the final price will be whatever this is, 20 into 18% is, this is 3.6 rupees. Okay, so here 100 minus 80 plus 3.6. Okay, so 100, this will become 20 plus 3.6 will become 23.6. Is that clear? Okay, so they might ask this final price also, so you should be aware of how to calculate that. Okay, next, over here, same thing, the price of the supply is 100 rupees. Now we are talking about a non-government subsidy. Non-government subsidy. Okay, so in case of a non-government subsidy, the price is 100 rupees, right? But and here the price linked subsidy is 80 rupees. Okay, so it is non-government price linked subsidy of 80 rupees, and when we are calculating the GST, we should calculate 18% on 100 only. Okay, so we should do 100 into 18%. Okay, we should not reduce the subsidy amount for this. Okay, so basically here when we are charging GST, we should charge in the full amount. Okay, not on the reduced amount. Okay, because non-government price linked subsidy is not available, or it is not allowed to be subtracted. Okay, so it should form part of the supply, or it should form part of the value of supply. Is that clear? Right? Is that clear? Okay, so I'll just explain again what is happening in this question. So there is a supply of 100 rupees and you're getting a non-government price linked subsidy of 80 rupees. But when you're calculating GST, since this 80 rupees subsidy is not allowed for the purpose of valuation of GST or valuation of supply, we are going to charge GST of 18% on the full amount of supply. Okay, meaning full amount of 100 rupees. So 100 into 18%, that is 18 rupees. So the final price, what will be the final price? 100 minus 80. Minus 80, this will become 20. 20 plus 18. 20 plus 18 will become 20 plus 18 will become 38 rupees. Is that clear? I think that should be fine, right? That should be a sufficient amount of explaining I've done, and I think it should be clear. Okay, so that was section 15 subsection 2. Okay, now we'll move on to section 15 subsection 3, which talks about what are the amounts that are to be excluded from value of supply. Okay, so after this I'll just recap from the top again. Okay, and then we'll look at some examples also. Okay, for better understanding. Okay, or actually we'll just recap section 15 subsection 2. Okay, so how I've thought about a memory trick. Okay, just to remember the clauses as well. Okay, so okay, so the basics should be strong. Okay, that section 15 talks about value of supply, section 15 talks about value of supply, section 2 talks about what is to be included, or what is to be added to the value of supply. Okay, now how I have remembered this is clause A is like A, pay your taxes, man. Okay, pay your taxes. And when you're talking about payment of taxes, any taxes that are paid or payable other than GST and TCS. Okay, A, pay your taxes. Okay, A, pay your taxes. Okay, right. Next, B is behalf. Okay, on behalf. Okay, what are we doing on behalf? What are we doing on behalf? What is the recipient doing? Recipient is paying on behalf of the supplier. Okay, he's paying a third party on behalf of a supplier, right? So in clause A, it is A, pay your taxes. What is in that? Right? Any taxes other than GST, other than GST, right? GST and TCS. Okay, other than GST and TCS, any other taxes has to be added. Okay, from B it is on behalf. Okay, from B it is behalf. Okay, now C, what are you seeing? You are seeing an incident that is occurring. Okay, from incident we can remember incidental expenses. Okay, incidental expenses or any commission. Okay, what do you see? I see an incident occurring. Okay, what do you see? I see an incident occurring. So incidental expenses, commission, and or packing expenses, right? Okay, next, what is D? From D we delay. Okay, clause D, we delay. Because of your delay, what will happen? You'll have to pay interest, penalty and late fees, right? Next, clause E, subsidy. Okay, clause E, subsidy. Okay, that's how you can remember. Okay, clause E, subsidy. Okay, right. So this is only the how to memorize what the clauses mean. Okay, so I'll just recap again. Okay, so A is A, pay your taxes. What do you remember by that? You remember that any taxes that are paid other than GST and TCS is to be added to the value of supply. Next, B, in clause B, you're paying on behalf. Okay, B from B, behalf. If any amount that is paid or payable by the recipient to a third party to whom the supplier was liable, then such amount is to be added to the value of supply, right? Next, clause C. What do you see? I see an incident. Okay, from that incident, you're seeing an incidental expense, or you're seeing commission and any packing expenses that are taking place. Okay, next, from clause D, you see a delay. Clause D, delay. Okay, because of the delay, what are you doing? You're paying interest payment and late fees, or you're paying IPL. Okay, IPL. Okay, you're paying interest, penalty and late fees. Now what do you do with clause E? Clause E, subsidy. Clause E, subsidy. Okay, so this talks about subsidy amounts. Okay, clear? So that was, see, we have already covered what each of the clauses mean in concepts. Okay, see, that concepts you are not allowed to forget at all. Okay, but if you are not able to memorize these clauses, then it is okay. See, it will make your answer look better, that is different. But in the, you know, like the circus of trying to memorize these clauses, if you are forgetting the concept, then there's no point of remembering these clauses. Okay, is that clear? Next, we'll move on to section 15 subsection 3. Okay, section 15 subsection 3, which talks about what are to be excluded from the value of supply. Okay, what is to be excluded from the value of supply. Okay, now, so if you are giving any discount on or before the time of supply, okay, when you're giving before the time of supply, or you're giving on the time at the time of supply, then 100% allowed. Okay, you can give discount, no problem. You can reduce that discount from the value of supply. Okay, but if it is given being post supply, meaning if it is given after the supply is made, then it is not allowed. Okay, generally it is not allowed. Obviously there are some exceptions where post supply discounts are also allowed. Okay, so first of all, on or before, or on or at the time of supply, it is 100% allowed. Okay, so at the time of supply or before the time of supply, you can 100% reduce the amount of discount that is given, okay, from the value of supply. But if it is post supply, then generally it is not allowed. Okay, but there are certain exceptions to that also. Okay, what are the exceptions? The exceptions are, it should be, the terms of the discount should be previously agreed to. Okay, it should already be previously agreed. Okay, so the terms of the discount should be previously agreed. Secondly, you must have a invoice wise working. Okay, so you must have this discount is relating to which invoice. Okay, I'll just explain it. I've already prepared an example for that. Okay, next, this ITC which was obtained or which was availed by the recipient when you had given the full amount of ITC, if they had claimed that entire amount, then they will have to reverse it, right? Suppose I'll just explain it later. I'll just cover this first. Okay, so firstly, it was the terms of discount should have been previously agreed to. Secondly, invoice wise working should be available, and third, ITC should have been reversed, and fourth, the supplier has to raise a credit note in GSTR1 for that particular month. Okay, so here the discount that is being given, it doesn't matter if it is in the same period or not. Okay, so you can give at the end of the year, or you can give after the period has been ended, but he has to generate the relevant credit note for that particular GSTR1 period. Okay, so that has to take place. Clear? Next, so these are the 4 points. Okay, so we'll just go off the screen and we'll just try to remember the 4 points. Okay, try to recall those 4 points. Okay, so firstly, I mean, if you're not able to recall, just watch this and then go back, you know, like maybe 30-40 seconds, and then watch it again and then come back here. Okay, so we'll just recall. First thing is that the terms of discount are to be agreed to. Terms of discount are previously agreed to. Okay, previously agreed to. Okay, next, what is that? Next, it was that right, the ITC should have been reversed, right? ITC should have been reversed. Right, and the supplier has to generate, or supplier has to upload credit notes. Okay, he has to issue credit notes. Issue credit notes in his GSTR1. Credit note in GSTR1. Okay, what is GSTR1? GSTR1 is the statement of or summary of outward supplies, or statement of outward supplies. Statement of outward supplies. And what is the due date for GSTR1 in case of regular non-composite taxpayers? It is 10th of next month. 11th of next month, right? 11th of next month. So the supplier has to generate GSTR1. He has to issue credit note in GSTR1. The ITC should have been reversed by the recipient. Okay, and the recipient has to reverse the ITC. Okay, next, last was the invoice wise working. Invoice wise working should be available. Okay, invoice wise working is available. Okay, next I'll just explain what these are. Okay, I'll just take this example. Okay, so here supplier A. Okay, there's a supplier A who has sold goods to recipient B for 100 rupees. Okay, in this 100 rupees there are 3 invoices. Okay, there are 3 invoices. He has created separate invoices, so it's okay, no problem. We're not concerned with that. Okay, so here in invoice A he has generated for 50 rupees. Invoice B he has generated for 25 rupees. Invoice C he has received another again he has generated for another 25 rupees. Okay, so when he's making that outward supply in this month, he will, for this April month, he will generate the GSTR1 and he will file that he has sold to recipient B for these particular for these values. Okay, for A, B and C invoices he will upload in GSTR1. Okay, and next, so this whatever he has uploaded in GSTR1, right, whatever he has uploaded in GSTR1 will promptly appear in recipient B's GSTR2B. Okay, 2A or 2B. Okay, 2A or 2B. 2A is very dynamic, 2B is static. Okay, meaning like this will keep on changing. Okay, this will change in that particular month only. 2B will generate only in the month in which that invoice is generated. Okay, let's not concern with that as of now. Okay, that is not relevant for this particular topic. Okay, so here supplier A has sold goods to supplier B, or supplier A has sold to recipient B for 100 rupees and he has made 3 invoices. Okay, he has made 3 invoices, one for 50 rupees, 25 and 25. Okay, now due to some agreement at the year end discount which is already entered previously, let's just assume it was entered into this agreement was entered in, let's say 25th of March. Okay, an agreement for this transaction was entered into 31st of March and the terms of discount are already discussed in the previous it is already agreed previously. Okay, basically it is the terms of the discount is already agreed to previously. Okay, so when those agreed terms are satisfied, supplier A is giving a 5 rupee discount. He's giving a 5 rupee discount to B. Okay, and he's raising a credit note for these particular invoices. For A he's reducing 2.5, for B he's reducing 1.25, and for C, invoice number C, he's reducing 1.25 again. Okay, so here whether all the conditions were fulfilled, right? So here supplier A has to generate credit note in his GSTR1 and the the recipient B has to reverse the ITC previously claimed. Okay, so if he had, let's just assume 10%. Okay, 10% over here was the GST amount. Okay, so this will come out to 5, this will come out to 2.5, this will also come out to 2.5. Okay, so total of 10 rupees worth of GST had been taken, right? So this 10 rupees worth of GST, he should reduce it to reduce it by into 10% into 10% into 10%. Okay, meaning of these reduced amounts into 10%, which is the GST amount, has to be reversed. Okay, is that clear? So here let's just see those 4 points. Okay, so the first point is that uh, this the terms of discount, right? The terms of discount have to be previously agreed to. Okay, are previously agreed to. Okay, what is the second point? The second point is that invoice wise detail should be available. Invoice wise detail should be available, right? Invoice wise details are available, okay, for discount. Okay, next, what is the third point? Third point is that ITC should be reversed. ITC is reversed by the recipient B. Okay, next, fourth point is that the supplier has to issue credit notes in GSTR 1 for that particular period, okay, in which he is giving discount. Is that clear? This is only relating to the post supply discount. It is not relating to the the discount that is given before or at the time of supply. It is only the post supply discount. Okay, very simple, right? Okay, so if these 4 conditions are satisfied, then he can give discount post supply also. Okay, now we'll just see what are the allowed discounts again. Okay, so here staggered discounts are available. Okay, staggered discounts are allowed. Okay, meaning buy more, save more. Meaning if you're buying 10 goods, or rather if you suppose in that particular month if you buy up to 100 units of that item, then you will get discount. Then this is also allowed. Okay, but those terms are already previously agreed to. Okay, and or periodic year-end discounts are also allowed. Okay, year-end discounts are also allowed. Okay, next, volume discounts, meaning if you buy up to this much quantity, or if you purchase more than this quantity, that time will give discount. That is also allowed. But secondary discounts are not allowed. Okay, what does secondary discounts mean over here? It means if you have already sold the goods for 10, okay, it is that supply, that transaction is already ended. Okay, it is already taken place and it has ended, okay, at 10 rupees, and later maybe next month or something the price is getting revised to 9 rupees, and then the supplier is telling, like the supplier is then giving that 1 rupee discount. That is not allowed. So after the transaction has occurred, later if you are revising the price and you are giving the discount, that is not allowed. Okay, that time you will have to charge GST on this 10 rupees only. Okay, so even if that supplier issues a credit note, even if that ITC is reversed by the recipient, nothing to it. Okay, you do whatever you want. Secondary discounts are not allowed. Meaning, if the sale has already taken place and if there is any revision in price, that kind of discount is not allowed. Okay, clear? Next, we'll just go up and I'll just give you a summary. Okay, so here firstly, when it comes to taxable value, what should be in the taxable value? Any price payable, any price that is paid or payable for the supply of goods or services. Any supply that is paid or payable for the supply of goods or services will come under section 15 subsection 1. Okay, what will come in section 15 subsection 2? The amounts that are to be added. Okay, what is clause A, section 15 subsection 2, section 15 subsection 2, clause A? What you from A, you remember A, pay your taxes man, right? A, pay your taxes man, right? What do you remember by this? You remember that any tax that is paid or payable other than GST and TCS, any tax other than GST and TCS is to be added to the value of supply. Okay, that is clause A. Now what is clause B? Clause B talks about behalf. Behalf. Okay, B say behalf. Okay, behalf meaning that when the recipient pays or is made, any amount is paid or payable by the recipient on behalf of the supplier to a third party, then that amount is to be included in the value of supply. Okay, next, section 15 subsection 2, clause C. What do you see? You see an incident, right? By that word incident, you remember incidental expenses, commission, packing expenses. Okay, so section 15 subsection 2, clause C, incidental expense, commission, packing expenses. If there are any incidental expenses, if there is any commission, if there is any packing, you have to add it to the value of supply, right? So 15.2A, 15.2B and 15.2C is clear. Next, section 15.2D. D say delay. Okay, D, delay. Okay, when you delay, you have to pay interest, penalty, and late fees. When you delay, you have to pay interest, penalty, and late fees. Okay, if there is any interest, penalty, or late fees that is charged by the supplier to the recipient, that time add it in the value of supply. Okay, if there is any interest, penalty, or late fees that is charged by the supplier to the recipient, add it to the supply. Okay, or add it to the value of supply. Okay, next, section 15 subsection 2 clause E subsidy, clause E subsidy. Okay, so when it comes to subsidy, only government subsidies are allowed, non-government subsidies are not allowed. Okay, just for recap, government subsidy is already subtracted in the question. What do? We analyze, right? Was it supposed to be subtracted? Yes, it is supposed to be subtracted. The question is also subtracted, no problem, we'll just ignore. Okay, suppose the question has not subtracted that amount, we will subtract it and then we'll add a note saying that you should have subtracted it, that's why we have subtracted it. Okay, clear? Now when it comes to non-government subsidies, they have subtracted it in the question. So is that correct? No, that is not correct. Okay, so we should add back that amount. If there is any amount of non-government price linked subsidy, that is not allowed. Okay, that amount is not allowed to be deducted or subtracted, so we will add back that amount. Suppose in the question they have not subtracted anything. If they have not subtracted anything, they should not have subtracted anything also, which is correct, so we'll just ignore and move on. Okay, is that clear? Okay, so that was section 15 subsection 2 subclause E. Okay, now moving on to subsection 15 subsection 3. Okay, section 15 subsection 3. Okay, what is to be excluded from the value of supply? There is only one thing there, which is discounts. Okay, when it comes to discount, any discount that is given at the time or at the time of supply or before the time of supply, 100% allowed, no problem, just take it, enjoy. Okay, but if it is given post supply, if any discount is given post supply, then generally not allowed. Okay, generally it is not allowed, but if it satisfies 4 conditions, it will be allowed. What are those 4 conditions? What are the 4 conditions? Try to say it with me. Firstly, it is with regard to what is the 4 conditions? Okay, so the first condition is that the terms of the discount should have been previously agreed to. Okay, so the terms of the discount are previously agreed to. Okay, the second condition is that the discount should be given invoice wise. Okay, the invoice wise details of the discount should be available. Okay, invoice wise details should be available. Third, ITC should be reversed by the recipient. And fourth, the supplier has to issue GSTR has to issue credit notes in GSTR 1. Okay, so that is for discounts. Okay, is that clear? Right, now we will just look at some of the examples that is given in this Edu91 material. Okay, so here, suppose a car dealer sells a car for 25 lakhs. Additionally, the dealer is required to collect 1% under the Income Tax Act. Okay, he is supposed to collect 1% under the Income Tax Act. Okay, so 25 lakh is the value of the car, and he is supposed to collect TCS at 1%. Okay, now which amounts to 25,000. Now the total amount paid by the buyer is 25 lakh 25,000. Okay, so 25 lakh 25,000, meaning 25 lakh of worth of the car and 25,000 TCS. Now for GST calculation, obviously as per section 15 subsection 2 clause A, we should take any tax other than 2 taxes, which is GST and the other one is TCS as per Income Tax Act. So here we should take only 25 lakhs for the purpose of calculating GST. Okay, so we'll just read it. Okay, however, the taxable value of the car is only 25 lakhs. The 25,000 worth of GST is excluded from the GST calculation. Okay, that is pretty simple, right? Is that clear? Right? I mean, this is a recorded video. There's no point in asking if it is clear. You just have to answer it to yourself. Okay. Next. Now ABC and Co has placed an order for supply of certain goods to Mr. Z. Okay, so ABC is the recipient here. It looks like ABC is the recipient and Z is the supplier. Z or Z is the supplier. Okay, as per the contract, Mr. Z is required to deliver the goods to the premises of A, B, C and Co. Okay, so Mr. Z hires a transporter for the transportation. However, the lorry receipt indicates that the freight is payable by A, B, C and Co. Basically, Z appoints, let's have they given the name of the transporter. Okay, appoints a transporter, right? Appoints a transporter. Okay, Z asks this transporter to transport goods to, or rather transport goods to A. Okay, so here the Z asks the transporter to transport these goods to ABC, and ABC has to pay the transporter on behalf of Z. Okay, what is happening here? Again, as per 15, section 15, subsection 2, clause, which one is this? It is clause, what do you see? Incidental. Okay, you saw an incident, so clause C. Okay, right, this is an incidental expenses. From incidental, you have to remember it is clause C. Okay, next. So here what else had they given? So thus in a contract, the obligation undertaken by the supplier, or rather the obligation undertaken by the supplier for supplying goods needs to be determined. Okay, all expenses in respect of such obligation must be incurred by the supplier. Okay, in case any amount has been incurred by the recipient, then the same will be included in the transaction value. This is very simple, right? We knew this, we have already discussed this. Okay, this example was simple. Okay, next one. XYZ Limited, a supplier of goods, has engaged Mr. X as a selling agent. Okay, basically I can already see this question. Okay, so they're talking about commission, right? We'll just read the question. Okay, the commission to Mr. X has been paid by the recipient of supply. In this case, underlying obligations of payment selling commission is of XYZ Limited, as it has engaged the agent to identify prospective customers. If the question starts over here. If the obligation to pay the agent is passed on to the recipient, then the price paid to XYZ Limited does not reflect the true value of supply. Okay, meaning thus the supply commission paid by the recipient is to be included in the value of taxable supply. Okay, is that clear? Right. So basically, again, this is also a question of incidental expenses. What is incidental expenses? Also includes commission and packing expenses also. Okay, it includes commission as well as packing expenses. Okay, right. So as per this amount of commission should have been added as per section 15 subsection 2 subclause or clause C. Okay, next. Now here grant biz contracts with ABC company to conduct a dealer's meet. In the furtherance of this, grant biz contracts with vendors to deliver the goods, services like water, soft drinks, audio system at the venue stipulated by the dates at stipulated prices. Grant biz is liable to make these payments as contracted. These soft drinks supplier want payment upon delivery, and ABC company agrees to pay the bill raised by the soft drinks vendor on grant biz receiving on receiving the crates of soft drinks. Okay, this amount is not billed by grant biz to ABC company, right? However, it would be added to the value of service provided by the grant biz to ABC company for GST, because the amount was required to be paid by the supplier and ABC co-paid it on behalf of the supplier. Okay, so here what has happened is, here grant biz asks ABC company, right? ABC company to conduct a meeting. Okay, conduct a dealers meet. Okay, so here grant biz goes to some vendors. He goes to the vendors, right? And these vendors are expected to provide services for ABC companies. Okay, and here grant biz asks ABC company to pay to the vendor itself. Okay, directly to the vendor. Since ABC company is paying directly to the vendors on behalf of grant biz, that is why the amount paid by ABC Co to the vendor should be added to the value of supply. Okay, that is what they were talking about. Okay, next. Okay, here whatever will come in the like section 15 subsection 2 clause C, which is relating to incidental expenses, commission, packaging. what are the other things that that it can take the form of? Okay, firstly it is commission. Okay, commission is already there, we knew that. Next, packing also was already discussed, so we already know that. Okay, next, inspection or certification charges. Okay, this is also like an incidental expenses only. Okay, if it is occurred before or at the time of supply. Okay, and if it is billed to the recipient. Okay, so if it is being generally done. Okay, if the supplier is generally conducting inspection, which cannot be directly billed to us, meaning if there are multiple customers that are that inspection charges are being occurred to, meaning one inspector is coming and checking multiple customers boxes, then it cannot be billed to us, right? So in that case, it won't form part of supply. But if it is only for our goods or our services, if that inspection is being undertaken and it should have been before or at the time of supply, then we will add it to the value of supply. Okay, next, installation and testing charges. Again, this is also an incidental expense. Okay, and being an amount charged for something that is done by the supplier in respect of the supply at the time of making the supply. Okay, next, payment charges, loading charges, designing charges, all these are incidental expenses. Okay, so there's nothing special over here, right? Next, we'll move on to the next example. Okay, here AJK Foods Private Limited gets an order for supply of processed food from a customer. The customer wants the consignment tested for gluten. Okay, basically is asking for inspection, right? So they're asking it to get tested, or testing charges, or the inspection charges, right? So AJK Food does the testing and charges a testing fee for the same. Okay, so here AJK Food Private Limited argues that such testing charges should not form part of the consideration. Okay, this AJK form, this Foods is kind of an idiot, I feel, right? So as per section 15 subsection 2 clause C, it is to be added to the value of supply, right? Any incidental charges that have been taken and it is billed to the customer, and if such, what was the other condition? Yeah, if it was before or at the time of supply, then it should be considered in the value of supply. Okay, next, is this argument correct? Okay, we'll just see what is given here. Section 15.2 mandates the addition of certain elements. Clause C of 15.2 specifies that amount charged for anything done by the supplier in respect of the supply at the time or before the time of delivery of goods or services shall be included in the value of supply, right? Basically the same thing that we have, same conclusion we came to, right? Next, okay, we'll see the next example, okay, which is related to interest payment of late fees. What is this? This is section 15, again subsection 2 clause D. Okay, interest late payment penalty comes from delayed payments, delayed D. Okay, clause D, right? Next, right, next, we'll see this example. A supply priced at 2000 is made with a credit period of 1 month. Okay, interest of 12% is chargeable. Okay, see, what you have to remember that 18% was not interest charged. Okay, there is a GST charged on the interest. Okay, so don't get yourself confused with that. Okay, so here 2000 into 12%. Okay, not 18%. Here only 12%. Right, this will come up to 240. And on this you will charge 18%. On this 240 you will charge 18% as GST. Okay, just a reminder there. Okay, the payment is received after the lapse of 2 months. Okay, so here again it is 12 into 2 by 12. Okay, so again this amount will reduce, you will get some X amount, that X into 18%. Okay, right, the amount of 12% one comes out to 20 rupees. Right, such interest will be added to the value. Okay, that we knew all that, right? We knew all that already, right? Next, X Limited has supplied goods valued at 2 lakh to Miss Y on a credit period of 1 month. Okay, the contract provides for levy of interest at 18% per annum on delayed payment. Right, makes payment to X Limited after 2 months. Okay, along with interest of rupees 3000 rupees. Okay, so interest is 3000 rupees over here, right? The GST law specifically provides that such interest of 3000 rupees will form part of the consideration and will be payable on the same. Okay, obviously that is correct, right? Next. Mazda Banners, an advertising firm, gives an interest-free credit period of 30 days for the payment by the customer. Its customer ABC paid after 2 days, meaning 2-day delay. Okay. And then Mazda Banners waived the interest. Okay. So if the amount of interest, penalty and late fees is waived off, then no need to pay, right? It is not to be included in the value of supply. That is what this question wanted to ask. Okay. Okay, next. Okay, next. Subsidies. When it comes to subsidies, the selling price of a notebook is 50 rupees. For the notebook sold to the government schools, a company uses its CSR funds to pay the seller 30 rupees. Okay, so that the students only has to pay 20 rupees. Here we know that it is price linked. Okay, here we got to know that it is linked to the price or price link, meaning it is actively reducing the price that is to be paid by the end consumer, right? So that's why it is price linked, and we know that this subsidy is being given by a company which is a non-government entity. So basically it is a non-government price linked subsidy. It is a non-government price linked subsidy. Okay, what did we discuss about non-government price linked subsidy? We discussed that we cannot take that subsidy into consideration while calculating the value of supply. Okay, meaning we'll have to ignore any amount. Okay, so here if the same subsidy is right, the value of the notebook will be 50 rupees as this is a non-government subsidy. Okay, if the same subsidy is paid by the central government or the state government, obviously that time you can reduce it by 30 rupees. So here the original price was 50, right? You cannot reduce that 30 rupees in case of non-government subsidy, but if it is the government subsidy, then you can do 50 minus 30 and charge GST on 20 rupees itself. Okay, next, the selling price of watercolor set is for 65 rupees. For the watercolor set sold to students in government schools, a company uses its CSR funds to pay the seller 50 rupees. Okay, again, when we're talking about a company, immediately we have to think it is non-government and it is price linked. Okay, so the students pay only 15 rupees. The taxable value as per the government will be obviously 65, because we are not going to reduce any non-government price linked subsidy. Okay, next. Okay, next. A philanthropic association makes a substantial donation each year to a reputed private institution to subsidize the education of low-income group students who have gained admission there. The fee for these individuals is reduced thereby coming to 3 lakh a year compared to 5 lakh. Okay. Okay, what would be the value of service of coaching instruction provided? Okay, so it is a philanthropic institution, right? It's a philanthropic institution which is we're talking about a non-government subsidy itself. Again when it comes to non-government subsidy, we are not allowed to reduce any amount, right? So the amount that is to be so wait, what is the original price? The original price is, the fee for these individuals is reduced thereby coming to 3 lakh compared to the 5 lakh. So obviously here the original price without subsidy only has to be taken for the value of supply. So here for GST we will be taking 5 lakh. Okay, so 5 lakh into GST percentage. Okay, clear? I think that should be simple. Okay, and in which section is this covered under? It is covered under section 15 subsection 2 clause E says subsidy. Clause E subsidy. Is that clear? We'll just move on. Okay, next. Nice. This Chameli chocolate company gives a discount of 30% on the list price to its distributors. Thus, for a carton of Chameli chocolates, the invoice in the invoice the list price is mentioned as 500 rupees, which is on which a discount of 30% is given to arrive at a final price of 350. Okay, this is 350 is allowed. Okay, because it is given at the time of supply. Okay, it is being given at the time of supply, so it is allowed. Okay, next. Okay, now the agreement of Raju Electrical Appliances with its dealers is that, the agreement of Raju Electrical Appliances with its dealers is that the purchase of rice cookers over 1,000 pieces in the Diwali month will entitle them to a discount of 5 rupees per cooker. Okay, so if they sell over, or if they purchase over 1,000 pieces during the Diwali period, then they will get a discount of 5% per cooker. Okay, therefore the quantum of discount can be determined only at the end of Diwali. Okay, meaning what are they talking about? They're talking about the year end or period end discounts. Okay, so what we discussed, if you remember that we had discussed that price or the periodic or year end discounts are allowed. Okay, however, since the agreement was relating to discount was in existence at the time of supply and the discount can be worked out for each invoice, such post supply discount will be allowed, okay, as a deduction from the value of supply of the rice cookers. Okay, so Raju Electrical has to issue credit notes for this 5% reduction in value and claim adjustment of excess tax paid. Okay, and the dealer must reverse proportionate ITC on the relevant stock. That's it. Okay, clear? Pink and Blue Private Limited sold goods to Orange Private Limited on 15 January at 50,000 rupees and charged 9,000 as IGST at 18%. The terms of the supply stipulated that a discount of 2% will be given if it makes payment within 1 month of supply. OPL avails that input tax credit of 9,000, meaning the full amount of 9,000 he has availed, okay, for the month of January and makes the payment for the goods on 10th February. Now what you have to see is whether the payment was made within time, right? Was it made within time? So 15 January, 15 Jan plus 1 month, right? So it within 15th Feb. Is it made within 15th Feb? Yeah, it is made within 15th Feb. So no problem. Okay. So it is made within 15th Feb. So a discount of 2%, which is how much? So 50,000 into 2%. Discount of 1,000 rupees, and on the 1,000 rupees also 18% GST is charged. So GST of 180 rupees. Okay, so here Pink and Blue Private Limited. So Pink and Blue Private Limited has to issue a credit note. Okay, I don't think it's being seen here. Okay, so Pink and Blue Private Limited has to issue a credit note worth 180, and who Orange Private Limited, right? Orange has to reverse its ITC, reverse ITC by 180. Okay, clear? Next. Now, in the above example, if the terms did not provide, okay, if the terms did not provide means then nothing doing. Okay, if the terms did not provide at an earlier date that a discount can be given, then nothing doing, no subtracting the discount, then full price only will be added. Okay, very simple. Okay, next, a company announces turnover discounts after reviewing its dealer performance. No. After reviewing its dealer performance, this and all doesn't matter. What matters is whether there was an agreement or whether there were terms of agreement of discount, or rather whether there was an agreement relating to the terms of discount. So if there is any agreement relating to the terms of discount prior to the supply, okay, so see, it can be given post supply if there is an agreement pre-supply, okay, or at the time of supply, right? We'll just read the question. Okay, the discounts are based on performance lab and are given as cashback. Okay, as these discounts were not known at the time of supply, they will not be deducted. Okay, that's what I was saying. If you have not agreed to the terms of the discount prior to the time of supply, then nothing doing. No, you cannot take the benefit. You cannot reduce that discount. Okay, next. Okay, there's one point that we had missed relating to this no claim bonus. Okay, basically when you are paying insurance premium and you have not claimed, you have not made any insurance claim for that particular year, the insurance company will give you a no claim bonus. Okay, so based on that no claim bonus, how do we treat that no claim bonus? Do we treat that as a discount? Okay, let's find out. Okay, where there is a deduction on account of no claim bonus, okay, where a deduction on the where the deduction on account of no claim bonus is provided in the invoice issued by the insurer to the insured, GST shall be leviable on the actual insurance premium amount. Okay, meaning that they will have to deduct the amount of no claim bonus that is given, okay, mentioned in the invoice. Okay, meaning here suppose the insurance premium, okay, the insurance premium that is paid over the course of the year is, let's say, 20,000 rupees. Okay, 20,000 rupees worth of insurance premium is paid, and a no claim bonus of 500 rupees is given by the insurance company to the insured person for not making any insurance claims. Okay, so the invoice, okay, so the invoice should be after deducting. So you will deduct this, and 19,500 will be the value of supply. Okay, that's it. Okay, so I think this chapter is done. Okay, I've already put the ICI material here. Okay, then we'll cover this value of supply ICI material questions in the next video. Okay, cool. Thank you. Tata. Bye bye. Take care.